Welcome to another S&P 500 analysis. Today is February 23rd, 2022. Today, the S&P 500 hit a milestone. It officially entered into the correction territory. So what does that mean? In this video, we will analyze the S&P 500 price action along with other major market indexes, the sentiment, and the market internals, and see what does it mean and where the S&P 500 and the rest of the market might be headed. Stay tuned. Let's start looking at this sentiment chart along with the S&P 500 daily chart. We're going to take a look at the S&P 500 daily price action in a little bit more detail later on. Today, the S&P 500 closed down 79 points or 1.84%. But look at the VIX. The VIX is actually above this 20-30 zone now. It closed at 31.02. So definitely the market participant are getting a bit fearful. But the strange thing is the put-call ratio is still under 1. So what that means is there are still more call buying than put buying. So until we get above 1, and right now it's basically still a little bit of a risk off, but the market participants are getting more fearful. And looking at this chart here on the internal, we're seeing the up-down volume ratio is not that bad. So it kind of tells us that the selling has been quite orderly. It's not a panic selling. Because normally, if we are looking at a panic selling, the up-down volume ratio would not be somewhere around 2.6 to 1 in favor of the down volume. It will be somewhere around 5, 6, 7, or 8 to 1, right, in favor of the down volume. So we are not seeing that type of a ratio. So that kind of tells me that the market is not in a panic mode to get out at any cost type of situation yet. But although, we are seeing a little bit elevated advanced decline, we are seeing 1,600 or so of more declining issue than advancing issue. But once again, if we are seeing panic selling, we would be looking at 2,000, 2,500 more declining issue than advancing issue, and we are not seeing that right now. Now, we are seeing more stock making new 52-week low once again. Right now, today, there were 401 stock made new 52-week low versus only 25 made 52-week high. And here on the cumulative advanced decline line, we are seeing this continue to move downward along with the S&P 500. So there's nothing there to really tell us that this correction or this pullback is coming to a close. Right now, everybody is moving in unison. Now let's take a look at the Nasdaq 100 and its internal. Today, the Nasdaq 100 closed down, 2.6%, around somewhere around 360 points or so. And also the up-down volume ratio is a little bit higher than the New York Stock Exchange, but still it is not in a panic mode. Right? It's only 3.5 to 1 in favor of the down volume. Now there are more declining issue than advancing issue in the Nasdaq market, a little bit higher than the New York Stock Exchange. There were 2,440 more declining issue than advancing issue in the Nasdaq. In addition to that, we're also looking at a little bit more number of stock making 52-week low versus the 52-week high. We saw Nasdaq had 722 stock made new 52-week low versus only 29 stock made new 52-week high. And similarly to the New York Stock Exchange, the Nasdaq cumulative AD line, there's nothing out of the extraordinary. It is moving in unison with the Nasdaq 100. They are coming down together. So basically right now, we are not seeing any divergence. Now let's take a look at the S&P 500 on this daily chart here. As you can see, it closed below this January 24th low, the 4222.62, because today it closed at 42.26 and 10, right? So that makes it, lost 12.36% from its all-time high back here on January the 4th. So that is officially classified S&P 500 in a correction territory, because anything that's 10% or more, then it will be a correction. Now, also the other thing is I also have put in a Fibonacci retracement that uses this swing. And as you can see that right here is the retracement zone. And the price bounced back up to near this 38.2. Then it finally broke out of this zone the second time Here's the first time broke below the 618 and the second time. So now it came down and took out this low. So if it continued to come down, then we could be looking at these possible retracement as potential target. And here's 1618 sitting at 3854.29. And the significance of that level is, see, this level is coincide or in confluence with this low here, which is somewhere around 3853 and 50. Okay, and that if it come down to this point, then it will be 20%, just a tad or more than 20% from its all-time high. And by definition, 20% or more, then that will classify the market as entered into a bear market. So we have to keep an eye on these levels here, especially this 1618. If it come down and tag this 1618, then the S&P 500 could be floating with a bear market. And looking at the Nasdaq 100, as you can see, the Nasdaq 100 also closed below the January low here. It closed today at 13,512.73. In addition to that, I also have a Fibonacci retracement on this swing. And you can see that it came up from the January low and tagged this 50% level. And right now it is broken down, went through this low here. So if it continued to come down, then we're essentially watching these level here, these retracement level 127 at 12,940 and 141 at 12,530 and 1618 at 11,943. The other thing that we want to bear in mind is look at this 19.4%. So it closed at 19.4% from this, from the all-time high. So only 0.6%, and that will put the Nasdaq 100 into a bear market territory. So keep in mind that anything is 20% or more, then that will be a bear market, a definition of a bear market. So keep an eye on that, because right now it's all you have to do is come down to this pivot level here, and that will put the Nasdaq 100 in a bear market. So again, keep an eye on this 127, because this right here is pretty much coincide and confluent with these pivot low here. So keep an eye on this, essentially somewhere around 13,000 level. And for the Russell 2000, as you can see, the Russell 2000 had retraced this 100% of this range here, this balance area. And today it has re-entered the bear market territory. It has closed down 20.93% from the high here. So that is officially in a bear market, the Russell 2000. So if this thing continues to come down, then we essentially are looking at the possibility of this 1715. And that is also a major move of this symmetry move, from here, essentially this particular swing here, right, project down from this pivot high down here and give you this 1715. In addition, we could also note that there is some pivot point here that's provides some support here at this pivot high. Now let's quickly go to the other indexes, the Dow Jones Transportation. You see the Dow Jones Transportation closed down 20.4% from its high here. So the Dow Jones Transportation is also entered the bear market territory today. And again, I have a Fibonacci retracement with these extension down here. So keep an eye on this 127 near this 14,000 level. Here, that could be the next potential target area for the Dow Jones Transportation. Now, let's take a look at the Dow Jones Industrial. The Dow Jones Industrial also entered the correction territory today by closing down 10.33% from its all-time high up here. So right now, we are essentially keeping an eye on the 32,000 level for the Dow Jones Industrial. Now, looking at the New York Stock Exchange Composite, you can see that the New York Stock Exchange Composite only closed down 8.16% from its all-time high up here. So it has not entered into a correction territory yet. So we'll just kind of keep an eye on this level here, 15,775, to see what will continue to come down and take out this low here. And looking at this 10-year yield, we have not seen much movement at all on this. It's still hovering below this 2% level here. So until we get above that, we are basically monitoring for it to move up to somewhere around 2.5%. And here looking at the US dollar, the US dollar is still inside of this zone here. It's trying to make its way up back to this 97.70 up at this upper edge here. With the Russian and Ukraine crisis, the crude oil really hasn't budged that much. But the thing is, eventually, we're still looking for oil to come up and tag that century mark up at that 100 level. And here's silver. Silver continue to move up, and we're basically looking at this 2470 area. See what to come up and take this out, and then move up to the 2667. And looking at gold, we are seeing gold making its way toward this 1923 level. Would not be surprised to see this thing tag this 1923 in the next few days. And then maybe we get a little bit of a pullback and then for the next push and up to this area here, possibly up at the 1960, 1970 level. Now let's take a look at the ETF. First, the SPY, the ETF for the S&P 500. As you can see, it's getting close to this January low here. So I wouldn't be surprised to see that eventually it's going to come down to this area here, somewhere around the 416, 415 level, then possibly get down to this 405 area. So let's go and take a look at the weekly profile. Here on the weekly profile, you can see that it has been one-time framing down on the weekly profile, and with the value area essentially moving downwards. So we see that the price is moving down and try to find the next balance area. And today it even rejected this area here by moving below this value area low. The price is coming down here, and it looks like it wants to test this level here at the low here, this January 24th low. And if we just look at daily profile, you see this value area from yesterday, it did a little bit of a look above and fell and came down, retraced down to the value area low, chop around, come back in, unable to hold the value area and move down. So that brought it all the way down to this 421.97. Right now, it has established a point of control down at this level here. So I wouldn't be surprised that we might see a little bit of a bounce tomorrow and then take out the point of control and move its way down to take out that January 24th low, and plus the lower level where we have identified as the potential target level near that 416 and 405. And looking at the QQQ, the ETF for the Nasdaq 100, as you can see, I have a symmetry move and measure down here at 100%, somewhere around 300 at a 618, and that will bring it down to 326.57. Right now, it is sitting near that level now. It's sitting at 329.62, and this is also in confluence with this little bit of a zone here, this support zone. So watch this 326.57, and if that's going to get taken out, then we essentially will be keeping an eye on this 300 level, and that would basically bring it down to somewhere around this low here. And for the IWM, the ETF for the Russell 2000, we basically have a symmetry move, a major move here. So you can see that at 100% major move, that will bring it down to somewhere around 170. And it is pretty much in confluence with this pivot high here. So keep an eye on this 170 level. The 1618 will bring it down to 185 area. Before I discuss the E-mini S&P 500 future, the ES, let me remind you to go check out my video on volume profile if you are new to volume profile. If you have not subscribed to this channel, be sure to click the subscribe and turn on the notification by clicking the bell icon. This way you will not miss my next volume profile video, where I will discuss some of the trading strategy you will see in this video in my S&P 500 analysis videos. Let's take a look at the intraday price action of the ES, starting with this volume profile chart where I have the daily volume profile. Let me mark up some of the key area that we will be discussing, which is the prior session value area here that I have marked off, and also the point of control. This would be the naked point of control, and you can see Today, when it opened, it did a little bit of a look above and fail, and it came back in and tagged the point of control and traced all the way back down to the opposite side of the value area, which is the value area low. Then it chopped around and came back in and unable to push up to the point of control, yesterday's point of control. And instead, it broke below this value area low. And now we essentially have a inside out type of a trading strategy that we will essentially looking at this range here and project this down to this area here. And if I use the Fibonacci extension tool and basically just project this range here to 100%, and you can see that we got a major move down here at 42.3350. And here I'm looking at the weekly profile. Each one of these profiles represent a week of price action. And so you can see here that we essentially have a couple of these version point of control, weekly point of control that I have marked off. And those are the level that most likely will get tagged in the future. Once again, it basically have broken down from this value area, this week's weekly price action, and we're basically projecting a 100% major move, and that would put it down at this 42.23.50 or 0.75. And you can see that today's price action actually went below that a little bit before it came back up. So right now we're essentially looking for the next possible price location if it continues to move down. And one possible area is this high volume node here, somewhere around this 42.06 and a quarter. And also the other thing is this low volume node down here at 41.98. So essentially below 4,200. Looking at the market profile for the ES, here we might be able to glimpse additional clues on where the ES might be headed and what are some of the projected target level. And here, as you can see, let me zoom this in here, and then we could get a closer look at today's price action. Today actually left behind some single prints here and also here. Right, we did not leave any poor high or poor low. So the one possibility is for the price to come up in the coming day and try to fill the single prints. So that's one possibility. But right now, with the bias on the downside, most likely the price might come up and fill this single print, a couple print, and then pushes down to these poor low and single print back in June. That was left behind in June. So here, June 22nd, we have this 4205.75. Remember, we had another high volume node or somewhere around there from the previous chart. From this chart here, we have this 4207, 4208. So we could be targeting this poor low here as one possibility for the coming days, that the ES might be headed down here. And once you get down here, the single print will be in play. And again, there is a single print, a stack of single print down at 41.97 and 3/4, which is somewhere around this 4,200. And once again, we have this low volume node here, somewhere around this 41.98, which is near this 4,200 level. So those are possible levels that we could be watching for the coming day to see will the ES be coming down and tag this, these levels here. In summary, the S&P 500 has officially entered into a correction. Although we are not seeing anything in sight to tell us this recent pullback has come to an end, but we also have not seen anything to tell us this market is heading into a bear market. The market is not in a panic mode as yet. The up-down volume ratio is telling us the recent selling is pretty orderly, and the advanced decline also is telling us that the market participants are not getting out at any cost. So until we see capitulation, this market will continue to move lower as the big money unwind their position. So what are your thoughts? Post them in the comment section below, and be sure to smash the thumbs up to help promote and share this video. Thank you for watching, and stay safe.